huge rally today off Bernanke's comments. Gold has now rallied 8% from its recent lows and is almost 100 bucks off its lows. But the rally in silver, it's been even stronger. It's up almost 10%. Now, we promised you a surprise guest in the on-air segment. We said he is a man of great importance. So who is he? He is Rob Doyle, the CFO of Pan American Silver. It's one of the larger publicly traded silver miners. Rob, welcome to the show. No one better to talk about precious metal than with you. First question, on your last earnings call, your CEO said that the cash cost of production for an ounce of silver was between $12 and $13. Can we assume from those figures that that is the floor for silver prices?
I think that's true, that this recent drop that we've seen in precious metal prices has definitely been challenging the industry. And in our case, we've got a portfolio of mines. Some are low cost and some are higher cost. And when we look across the industry, for sure, we see that the current price is definitely challenging some of those higher cost operations. So we are seeing some supply side response to the recent drop in precious metal prices. So I think fundamentally you are right that there will be an impact there, and that at some point in time there will be a floor that comes into play.
We're talking to traders here, so let me ask you this. How much of this selling gold and silver, how much of it is technical and how much is fundamental in your opinion?
I think most of it is technical. The market is certainly dominated by some large technical players, and I certainly believe that the precipitous drop that we saw in precious metals somewhat fed on itself as the market moved lower. The moves were so vicious that it fed on itself and created more selling. The fundamentals of certainly of silver are very strong. We see good industrial demand for silver, and believe in the long term that silver prices will rebound as the fundamental picture becomes clearer.
All right, Rob Doyle, CFO of Pan American Silver. Thanks so much for joining us, sir.
Thank you.
You're very welcome. Jim, let me ask you, trade silver for me here.
No, I actually think this bounce is not quite done in either gold and silver, and I increased some longs today. I got some long exposure to silver today. I'm interested in buying the silver contract at 20 bucks with a target on the upside of 20.88. It goes back to 1974. That's my stop-out point. But I think overall, I have no problem with the market of silver and gold going lower, because I think things have materially changed as far as the dollar and rates go. But Bernanke can jawbone rates a little bit lower, and silver and gold can pop a little bit higher, just based on the fact there's a lot of people shorted on the rundown.
You know, Jim, I'm not liking silver right now just for the same reasons I don't like gold. And one more is, our guest mentioned the industrial demand, and I really don't see a positive picture of that when I look at the numbers coming out of China lately as far as their industrial production. So I understand what you're doing, and I can't argue with the numbers. I just would rather short silver and play it by that way at this point. I know you're not risking a lot on the downside, and you realize that if it does start breaking these levels, I'm out of the trade.
All right, guys.
And that's fine. When we start talking about the industrial applications of silver, how much of it really is that compared to how much it trades as a precious? I think it's way more of a precious still.
Let's get the rich reward here on Jim's silver trade.
I think it's 10 to 20% industrial, but we'll leave that there.
All right, we'll get it next time, guys. The passion debating silver. He's buying silver at $20 and targeting a bump up to $20.88. Now, since each 1 point move is good for $5,000, this trade risks $1,300 to make almost 3 times that.